Hi everyone, hope you're all doing well on this Friday as we head towards the weekend. If you saw my previous video last week, I did a response video to Epic RV's question of whether silver stacking still made sense. And what I did was I just looked at the original motivations for my brother and I stacking silver and just looked to see if they still held up today. And of course we concluded that they did. But what I wanted to do was just make a little bit more in-depth of a video on the whole quantitative easing program that the Fed is running. And if you remember, quantitative easing consists of $85 billion worth of asset purchases every month. And these assets include US Treasuries and mortgage-backed securities. So recently, there's been some fear in the financial markets that the Fed would start reining in its QE policies. But if you look at this article here, the Federal Reserve Bank of Atlanta's president and CEO makes it clear that not only are they going to continue QE into the long-term future, at least until 2015, they're also not ruling out the fact that they may increase QE in between that period. And if you read this article, it really seems that they're entirely fearful of any type of deflation entering the market, that they're going to try to keep their inflationary policies going, and if that means stepping in and doing a little bit more QE, then they're not going to let that stand in the way of trying to keep these inflationary policies going. And also, too, it does make the argument that interest rates are looking like they're going to be at zero at least until 2015. Now, one might argue that even though we have this QE program running, the Federal Reserve has set the benchmarks that once they hit 6.5% unemployment or 2.5% core inflation, that at that point they're going to start reining in QE. However, I think that this article gives a really good answer to that. It basically asks the question of whether the job numbers, basically, the falling job numbers towards 6.5%, whether those job numbers will be enough for the Fed to start reining in QE. And it seems to argue that you shouldn't count on it, mainly because of the Federal Reserve's mandate to maximize employment. And it also makes a kind of semantic argument that the Federal Reserve never said that it would raise rates once unemployment fell to 6.5. It only said that they would keep them that low as long, or at least until the unemployment remained above 6.5%. Now, this article makes the mistake, it doesn't mention too much about basically the economy's addiction to QE at this point. It really should mention that if they ever did start reining in QE, there would be a huge calamity in the stock markets and pretty much all financial markets across the world. So even though there are those benchmarks out there of 6.5% unemployment, I don't think that that's going to be the end of QE. I think the addiction right now is too strong, and right now they're going to continue having rates, I think, at this pretty much 0%. I think it's going to go longer than 2015, and this QE asset buying program of $50 billion every month is going to extend at least until 2015 as well. Now, these economic realities have a huge influence upon my brother and I's decision to stack precious metals and to turn to silver and gold in order to protect our wealth. And this is because the entire QE program is inflationary. Firstly, in the sense that what it does is it increases the base monetary supply, which is just the amount of bank reserves that each bank is able to hold. And it does this because when the Fed buys a government bond, what it does is it creates money basically out of thin air, which it then transfers to each of the banks selling the bond. So at the end of the whole transaction, what happens is the Fed owns a government bond, and then the bank has an increase within their bank reserves, which they are then able to lend out. And also, too, secondly, what happens is it's basically an inflationary pressure upon prices. What would have happened without QE? If it never entered the market, there would have been a huge contraction of credit, meaning that it would have inhibited each of the banks' ability to actually lend out money. And also, too, this would have had a subsequent effect on prices, namely, would have caused prices to fall. But once QE was entered into the market, it ensured that banks had ample bank reserves, which they were then able to lend out. And right now they're basically sitting on those reserves, but when they do lend it out, there's going to be a huge rise in price, and it'll cause the value of the dollar to decrease, which hopefully then our precious metals will be able to keep their purchasing power, and we will hopefully be able to save some of our wealth that way. So I just wanted to make this video just talking about QE and how it affects our decision to stack silver. Let me know what you guys think in the comments section below, particularly if QE is affecting your decision to stack silver. So again, thank you very much for watching, guys. Again, we appreciate every time that you like, comment, and subscribe. We love to hear what you guys say in the comments below. But again, thanks for watching so much. I'll see you next video and have a great weekend.